Hello, and hope you're doing well. This hour I will be with you with the have a short review on Federal Reserve meeting. FOMC had a lot, they concluded its 2 days meeting last night and published a statement. We had a press conference as well. Generally, what we could understand, and as market was expecting, the central bank held the rates at its target of 3 point, not the target of the, its range of 3.50 and 3.75% is widely expected. So that was no surprise as we were expecting. The market was counting on that. However, the market participant and investors, they were looking after any sign that what central bank is going to do or to understand, to get the insight from the press conference, from the statement, and the comments from the central bank speakers, that will they have any rate cut in a short term or not, or what's going to happen there. Generally, the decision, this meeting was very natural, nothing we had surprise, no surprise, not in the news, not in the press conference, not in the statement. It was so natural, one of the flat and could be somehow we can say really no news meetings that we had. Just two members they voted for 25 basis point rate cut, Miran and Christopher Waller, and Stefan Miran and Christopher Waller. They vote for 25 basis point rate cut. Others they voted for holding the current rate. That was what's happening in the meeting, and the statement talked about the database decision for the next meetings. The same thing we had in the press conference. Nothing. Generally we can say exactly nothing. We had to be surprised or to make a decision based on that. No news. Sometimes we can say that the no news is the good news, but anyway. But looking at the CME Group FedWatch tools after the meeting, we can say now the market, based on what happened, now there is a more than 86% chance for holding the current rate in its next meeting in March, and even for April, we have more than 74% chance for holding the current rate. Only in June, there is around a 38%, 40% chance for 25 basis point rate cuts for holding the current rate, and about the 48% for 25 basis point rate cut. They are still so close. So still they have almost 5 months. It's going to be 5 months later, but still they have the 5 months still to reach there. But however, just like we can see, the overall what we want to talk about, what we can see is that the market is still 50-50 is about what to do. The market doesn't decide it yet. But I have to say that the June will be the first meeting of the first meeting of the new Fed chair. Well, but there's also the question. There is an item that there is a condition that if Mr. Powell wants, he can extend his stay until end of 2027, till January 2028. Or January 2027. So I think till January 2027 or January 2028. I think January 2027, something like that. There are so many conditions that can happen there. So about the next Fed meeting, chair, also there are too many questions if Mr. Powell will continue staying there, or the new person who is going to be the new person, will they go to and make this risk to cut the rate in the first meeting or not? All this question, because the June will be the first meeting for the new Fed chair. That's a long time. We say the Fed chair Powell. Whenever we say the word of Fed chair, right after that, with the Mr. Powell's name comes. So probably we have to forget about this habit and learn about the new name. Who is going to be? That's also the question. Anyhow, the market was, the meeting was very natural. There's no surprise, nothing there, no sign that the Fed is going to cut their rates, and nothing around that. But generally, looking at these charts, we can understand the first rate cut, possible rate cut, will be at the end of the first half of this year, which means somehow comparing with the other central banks in Australia, comparing with the other central banks in the United Kingdom, in Eurozone, in most of them, we are expecting to see at least 25 basis point rates cut in most of these main central banks. I mean, excluding Bank of Japan, that we are expecting 25 basis point rate hike. For the others, we expect 25 basis point rate cut, which means the spread will be lower, and that can again increase the spread will be higher, sorry, and that can again increase the demand for the dollar index and the dollar bonds, which means even if Fed doesn't do anything with the policies that the other central banks are going to make and decide in the next 6 months before the Fed meeting, that can increase the demand for the gold. That's why for dollar index. That's why this decision is somehow in favor for US dollar index. Let's check the chart. We can understand better what's happening there. We now that at the same time that when we are talking about the chart and the market reaction, don't forget that we are in a very volatile. The market is very volatile because of the geopolitical tensions also, which is going on in the area. We know that for now, because of the higher tensions between the United States and Islamic Republic, basically Iran, the tension is very high, and the military actions possibility is increasing. That's increased the market risk, and we can see the risk around about 18. While after this meeting, we were expecting to see the lower risk, but still, this risk is still high. But looking at the market reaction, checking with the dollar index trading at 95, 98, around 96 border. This decision, as mentioned, as it again can increase the spread between the dollar and the other currencies that can increase the demand for the dollar index. So for the first 6 months, we expect to see the dollar index above 96. So that's why recovering after free fall that we had, a shortfall that we had in the past weeks, past days especially, we can expect the dollar index to regain again above 96 and trading between 96 and 98 for now. This is what we're expecting to see, comparing with other central banks meetings and other central banks decision. We know that yesterday we had the central banks meetings in Canada and Brazil as well, and both of them they hold the rates same as the Federal Reserve. But for the next meeting, both of them you are expecting to cut the rates. That's what we are not expecting, something that we are not expecting from the Federal Reserve. This decision is not in a favor for this decision is not in a favor for the stock markets. That's why the money which can come out of outflows from the stock market can go through the gold market. So generally, this decision, even thought it can increase the demand for the silver for the dollar index, and it can support the dollar index, but still the dollar index is already weak around 96, 97. Also, it can count as a weak dollar. So that's why the market can be positive about the gold, as we are not so much positive about the stock market for this decision. When I'm talking about the stock market, look, the stock market is this is the S&P 500 reaction after the last night meeting. It was a negative reaction to this because higher for longer is what we can expect. But right away after that, we had a very good the earnings last night from the Microsoft, Meta platforms, and all these companies that they had published their data last night, IBM, the market has a positive reaction, but still cannot gain more than what it gained only yesterday before Fed meeting. Generally, the market is natural about that, and while we can expect this higher for longer, at least can continue for the next 5 months, we can say this decision is not in favor of the stock markets, and that can put the pressure. So what we can understand from this meeting, higher for longer can support the dollar index in the midterm and a longer term, and can put the pressure on the stock markets. Even thought the good earnings that we had, they can support it. What I'm talking about, the good earnings, we had a good EPS and we had a good revenues so far, but about the outlook of these companies for 2026, none of them they didn't have such a brilliant outlook. So that's why I'm not so good. I'm not looking at so good in the stock market. So not about natural and the side, natural and the downside risk is higher than natural, upward risk. That's the same thing that we can see in Nasdaq and the Dow Jones as well. In the cryptocurrency market, this higher risk in the market, geopolitical risk in one hand, and the higher for longer in the rates, on the other hand, both of them, they can put the pressure on the cryptocurrency market, especially for the Bitcoin. And that's why for now, we don't have that the Bitcoin had a negative reaction to this decision, and we expect to see this negative reaction can continue. And for now, we don't have any clear sign that Bitcoin can take advantage of this decision. That was what happened in the central bank meeting and Federal Reserve meeting and market reaction and our expectation. Hope it was useful for you. Talk to you again soon. Have a good day. Bye bye.